Welcome to the Full FX Unfiltered with me, Colin Lambert, publisher of the Full FX. This episode is in association with CLS, and I'm delighted to be joined by Keith Tippell, who's Global Head of Product at CLS. Keith, welcome to the Unfiltered video series.
Thank you very much. It's a pleasure.
What I wanted to talk to you about was the evolution of the settlement process. And it was kicked off obviously by the BIS, but particularly with the FX Global Code publishing a revised code after the 3-year review. And settlement did play quite a big part of that change. So what was your take on the updated principles, and what does CLS do to help people adhere to them?
Well, Colin, as you rightly say, the amendments for principles 35 and 50, which are related to settlement risk, were, in my opinion, fairly material. Firm encouragement for use of PVP mechanisms where available, and also, I think, also very importantly to note that there is firm guidance around automated and standardized approach for the net settlement process. Both of those areas, of course, are very much a focus for CLS settlement today in terms of PVP for the market for 18 currencies, but also related to that automated, standardized and ideally centralized net settlement process. That's what our CLS net platform does for the market.
Why is it that PVP is so important? I mean, can you sort of give us that sort of background, as to why the authorities in particular think it's important?
Yeah, I mean, it's very much related to systemic risk. Principal risk protection is key, particularly in times of market stress, but just generally day to day, the market needs to rely on the fact that they're mitigating principal risk protection. So essentially, the final payment of your obligation is not made until you get received back the obligation from your counterparty. So it's that principal risk protection, which is particularly important given the size of the FX markets.
Yeah. Something I'm very keen to talk to you about is a recent announcement from CLS that you're extending, or you're starting a program with a group of market participants to extend or to investigate the extension of the number of CLS eligible currencies. Can you explain to us what's going to happen with that program?
Yeah, so a bit of context on that. So following the BIS survey, in the increase a material increase in settlement risk in the market, we undertook an exercise to work in collaboration with a number of our large global bank settlement members to actually analyse, using their data they contributed into our analysis, exactly what's going on, exactly where settlement risk resides, and in particular, the degrees of settlement risk that you can attribute to different types of settlement processes. One of the conclusions from that exercise is that one of the biggest buckets, arguably the biggest bucket of addressable settlement risk via a PVP mechanism, is in currencies that CLS doesn't support today. And we're very focused on looking at what CLS, in collaboration with the market, needs to do to address a wider range of currencies. As you note, we are very fortunate to have 12 of our largest settlement members working with us in a working group. We've been public on that a couple of weeks ago. And so we're exploring essentially an alternative mechanism to that of CLS settlement, recognising the fact that the degree of flexibility in terms of operating model and other aspects of the service design to address those markets and jurisdictions for those currencies probably needs to look somewhat different to CLS settlement, where there's a single model for all participants in all currencies. So I think flexibility is going to be one of the keys for that service. We're greatly encouraged with the extent of the market interest, both in terms of mitigating settlement risk, but also, just as CLS settlement does today, very material potential benefits in terms of liquidity optimization in these markets. And that's really important as a business enabler, but it's also important because in a number of the currencies that we're looking at, a number of those jurisdictions, liquidity constraints are actually causing some of the settlement failures. So you get two birds with one stone.
Yeah, I have to say personally, I look at it and think it's quite an important development for the industry. Notwithstanding nothing's actually been decided yet, but it does seem to me, I mean, it would probably be one of the bigger advances that we've seen in the sort of settlement risk reduction space?
Yeah, I mean, I think the markets closely acknowledge the work done by the FSB and CPMI. Obviously, the publication of the cross-border roadmap in October last year, in particular building block 9, which references the need for a broader adoption of PVP mechanisms. So I think if you look at what's going on in the market in terms of the growth of trading in a wide range of what some firms call emerging market currencies. I think that's probably an historic term now, given a number of these currencies represent very large economies now. But big growth in those in trading in those currencies by global banks, and of course a range of regional banks, including the onshore banks. And I think it's time to find a solution for that. It represents the biggest slice of the pie in terms of where we understand there to be material settlement risk, but also just as CLS settlement has enabled over the last nearly 20 years, that liquidity optimization and, for example, an easing of the constraints around counterparty settlement risk limits, because it's a safer, better operational process, should enable more transactional activity to the benefit of market participants and probably the economy as a whole in those jurisdictions.
So when you're on, as you commence this project, what sort of challenges are you likely to sort of have to overcome? What are the challenges to bringing something on to CLS?
Yeah, well, we recognise some of the historic barriers in terms of, I guess the degree of flexibility you have in a service to be able to manage around market dynamics that are real, and can't necessarily be ignored, whether that be the time at which the service operates, the time of where settlement session runs in terms of when there's commercial activity and therefore liquidity in those markets, the degree to which the underlying rule books in terms of how the payment systems work in those markets needs to be understood and not necessarily changed but adjusted for. So I think, again, we're very keen to look at a wide range of, and we have, working with our group of 12 global banks and actually analysing a substantial amount of data they contributed to a pilot exercise that's currently ongoing. We're looking at practically what's required in these markets. Both from the lens of not assuming that there can be substantial change in terms of practices in those markets, and flexibility where potentially the service can have more than one settlement mode and therefore adjust to different market dynamics on a per currency basis.
Mm. On a broader note then, so how do you see this space evolving from here? Because, I mean, obviously, we're looking at new technologies coming into financial markets. CLS itself has just completed a replatforming. So how do you see this space evolving? What are the key trends or issues you're looking out for?
Yeah, so I think, there's a lot of noise in the market around, obviously, the topics we've just discussed in terms of settlement risk mitigation. I think there's an expectation, when we talk to our clients, they recognise that their primary regulators are quite keen to see some action in terms of mitigating settlement risk across a wider range of their portfolios. Conversely, there are conversations about things that in theory could fundamentally change certain aspects, certainly of the retail FX market, such as potential issuance of central bank digital currencies. We're in all those conversations as CLS. We keep a careful eye on market developments, both on the public and the private side. But we are trying to focus our time and sort of not necessarily chase new potential end states before that they are somewhat clear. Again, on CBDCs, it's very hard to plan for that until the design of the CBDC, which will be decided by the central banks themselves, is known, and we're some way off that. And the other thing I'd note on that topic is a lot of the initiatives are quite retail centric. So we're not being complacent. We recognise that that's potentially relevant to the wholesale markets in the much longer term, and we may well have a role because standardisation and central operation around PVP may be very much required also in terms of a digital future in terms of currencies. But I guess the bottom line is we're focused on what's in front of us, what our clients are most keen for us to focus on, which is to mitigate risk. That's our purpose across a wider spectrum of currencies and participants, and also be a business enabler, just as we have, let's say, for the last near 20 years. And that's our primary focus in terms of this initiative. We'll keep a careful watching brief in terms of what are the promise of other new technologies, but I think chasing them too hard and ignoring the practicalities of how the markets operate today, we don't think is terribly wise. We also recognise the importance of governance, trust, and having a track history. So obviously we bring all that to the table. We think that whatever future solutions there will be, you're going to need aspects of those dynamics to be successful and to have the trust in the market.
I think you make a very good point there. I think sometimes as an industry, and I guess as a society, we tend to try and always look for the next big issue, when actually there are actually serious gaps in the FX market infrastructure need filling, as identified by the BIS, which I guess you guys are doing.
Absolutely. And I think just as CLS is today with its CLS settlement service, it's centralized infrastructure, which is a fundamentally important support for the FX market, both from a risk and a liquidity optimization standpoint. If you look at our CLS Net platform again, it's building centralized infrastructure for the benefit of the market to automate, to standardize, to mitigate risk. And this new platform that we're designing and will build around a wider range of currencies, a more flexible approach, is very much in that category thing. But the collaboration with the market is key. I've mentioned the global banks we're working with, but we're very, very keen, and we are initiating contact with the local markets for the jurisdictions that we are primarily focused on. And the views and opinions and the support of those markets are going to be, as it is always, key in terms of the future success, and actually will influence aspects of the design of the service.
Yeah. Well, I guess to repeat myself, I think it's actually quite an important initiative that's taking place here. So hopefully it's successful, and we look forward to a good conclusion from that. Keith, thank you very much for your time and your interesting views here. This has been the Full FX Unfiltered in association with CLS. Thanks for watching.